Now, without further delay, let's begin today's event, sponsored by Wolters Kluwer and hosted by Accounting Today. I'd like to introduce your moderator for today, and that is Danielle Lee. Danielle, you have the floor.
Great, thank you so much, and thank you all again for joining us for today's webinar, Enhancing Audit Quality Focus and Trends for 2020. I'm your moderator today. My name is Danielle Lee, and I'm the Managing Editor of Accounting Today, and I'm pleased to introduce today's speakers. We have Patrick Tikorsky. He is the Product Manager for the Accounting and Audit Solutions and has been with Wolters Kluwer since 2016. Prior to joining the product management team, he worked as an A&A software consultant, helping firms become more productive by conducting training and consulting on various CCH ProSystem FX products, including Engagement, Knowledge Coach, and Teammate Analytics, among others. He also delivers multiple CCH Learning and Development Academy School of Audit programs, such as knowledge-based audit, methodology, and role-based programs. We also have Garrick Stenhouse. He is a Bentley University graduate, a CPA, and a manager in the A&A department at DeSanto Priest & Co. in Rhode Island. With 9+ years of experience, he specializes in auditing manufacturers and in audits involving precious metals. He is a member of both the AICPA and RISCPA, and in 2018 was a graduate of the AICPA's Leadership Academy. Today we also have Carl Mays. He is the Senior Technical Manager of Special Projects on the Public Practice and Global Alliances teams at the American Institute of Certified Public Accountants. He is responsible for managing practice quality initiatives for AICPA, including regulator quality studies, practice monitoring, and various technical and regulatory-focused projects. He is the project manager for the AICPA's Enhancing Audit Quality Initiative and manages the execution of the AICPA's 6-point plan to improve audits. And now I'll turn over today's presentation to Patrick. Patrick, you have the floor.
All right, Danielle, thank you very much, and welcome everyone. Again, thank you very much for taking the time out of your schedule to be with us today. I know how crazy of a time it is, so we definitely appreciate your attendance and look forward to spending this time with you. As I've been talking with practitioners over the past couple of weeks, a couple of trends have really come across in our conversations, the first one being just how crazy the past couple of weeks are. So I'm really hoping everyone has gotten over that hurdle and settled into our new normal, I guess is the way that we're describing it. The other trend that I've heard is a lot of practitioners are anticipating maybe a little bit of a lull in their practice here. You know, as things like our tax deadlines get moved and just getting used to this new workflow, the way our clients are being impacted, you know, maybe we're going to see a little bit of downtime. And I really think that's going to fit well with our objectives of this session here today and give us a chance to reflect on our practice and make sure that we're addressing some of the common trends that we're seeing. You know, we do have a focus here this afternoon really on enhancing our audit quality. So we'll look at some of the common issues that firms are seeing out there, and hopefully we can use this time to make sure that our firms are complying with any new standards that are coming out, looking at software, you know, maybe making a plan to update our technology, and really use this as an opportunity to drive our firms forward. Before we dive into the content, Danielle, if you wouldn't mind, I'd like to start with a polling question and just kind of poll the audience here and see what your thought is as far as what are some of the biggest challenges facing our profession right now.
Sure, I'll turn it over to our first polling question today. As you mentioned, the question is, in your opinion, what is the biggest challenge facing the audit profession? The choices here are quality and compliance, incorporating analytics, or keeping up with changing technologies. You want to click the radial button to the left of your choice and click the submit button to make sure your response goes through. Once again, we're asking, in your opinion, what the biggest challenge is facing the auditing profession? Quality and compliance, incorporating analytics, or keeping up with changing technologies? Patrick, I don't know if you have any insight into where you think the results will fall with this polling question.
Well, you know, honestly, I don't think there's any wrong answer to this polling question. I think a lot of these issues are what firms are facing. So just kind of wanted to get a feel for what the group thinks the priorities are.
Great. Well, I think that's enough time for everyone to have it locked in, so let's go ahead and see. I'll give everyone a final 3, 2, 1. It looks like there's a pretty good range here. Keeping up with changing technologies is roughly half of the vote, but quality and compliance is close behind that, and there's still a good portion of people that say incorporating analytics is a big challenge. With that, I'll turn it back over to you, Patrick.
All right, thank you. Yeah, that's the distribution of these votes is about what I would expect, and like I said, there is no wrong answer to it. As you can imagine, these are really the three kind of key topics that we want to focus on as trends for us right now. I know we've heard a lot lately about the Enhancing Audit Quality Initiative. The AICPA has that ongoing initiative, and we're very grateful to have Carl with us here today to really talk about that. Also, if you haven't followed the ASB lately, they've been very active. There's been a lot of new standards issued. We do have, I think, going to be a pretty significant exposure draft related to audit evidence, which should get issued lately. So just keeping up with audit quality and compliance, I think, is going to be a challenge for firms. Incorporating data analytics tends to still be a challenge for us, I think, especially in the times that we're facing right now. As we settle into this kind of remote work environment, maybe going through and testing things differently than we have in the past will continue to be a challenge for us. So I think we have an opportunity there. And then the biggest one was just the emerging technologies. I mean, even me working for a technology company, it's amazing the number of different products that are out there. So we want to go ahead and dive into each one of these areas a little bit more and try and provide some insights for it. So Danielle, before we get into the first one, audit quality, would you mind doing the next polling slide for us? I want to
no problem.
Their opinion on audit quality right now too.
Great, let's get to that. Your next polling question. Based on a survey of peer reviewers from approximately 400 engagements reviewed in 2017, what % of firms failed to comply with some aspect of AUC 315 or 330? Your choices here are less than 25%, 25% to 50%, or greater than 50%. So you have three choices there. Again, less than 25%, 25 to 50%, or greater than 50%. Again, you'll want to click the radio button to the left of your choice here and click the submit button to make sure your answer goes through. We'll give everyone a final few moments to get those answers locked in. And while you do, just a reminder that you can submit your questions to the Q&A panel at any point throughout today's presentation. We will devote some time to the end of the presentation to address some of those questions. Let's go ahead and give everyone a final 5, 4, 3, 2, 1. And it looks like 25 to 50%, got 57% of the vote right there. Patrick, I'll turn it back over to you.
All right, thank you. You know, this one really surprised me when I saw the stats, and the actual answer to this one is greater than 50%. So in that review of peer reviewers, they really did find still that really high rate of deficiencies. And at this point, what I'd like to do is to turn it over to Carl from the Enhancing Audit Quality Initiative. And kind of from this study, they were able to develop some points of emphasis. So Carl, would you mind kind of leading us through what you're seeing as points of emphasis in the Enhancing Audit Quality Initiative?
Yeah, happy to do that, Patrick. So a little bit of background. At the AICPA, back in 2014, we started our Enhancing Audit Quality Initiative. And the idea is to try to take all the different mechanisms that we have at the Institute, from peer review to standard setting to communications and development of tools and learning and so on, and drive them all at certain areas that we think represent the greatest risk of nonconformity to practice. So, kind of stepping back, when we first started out, we found nonconformity rates, and when I say nonconformity rates, I mean rates of folks failing to comply with professional standards in all material respects, such that under AUC 585 you would have to go back and do more work. We found rates that were really high, around 50%. So we started to dig into that, and over the past few years, every year we identify 4 or 5 areas of focus that we think are, the most important areas for practitioners to focus on that year, given the results of peer reviews that we're seeing, environmental trends that we're seeing, and so on. So our 5 areas of focus for 2020 are risk assessment, and you just saw that poll. It's interesting that something like 75% of the folks on the line thought nonconformity around AAC 315 and 330, so risk assessment and response effectively was under 50%. Based on results of peer review polling, what we're hearing from the peer reviewers is nonconformity is actually around 64%. And when I say nonconformity, I don't mean kind of minor issues. You check the box you shouldn't have checked. I mean, these are issues that are so substantial that the auditor would have to go back and do more work. Sometimes they would have to, withdraw their report and reissue. That's 64% of the time. So that's a really high number, guys, and we'll go through some of the most common issues. Engagement acceptance is another one, and we'll talk through some of the issues that we're seeing in that area and ways that you can protect your firm and ensure that you're complying with the standards. Auditing revenue recognition. So all of us are familiar with ASC 606 is a massive standard, and just trying to ensure we're, helping our clients conform to that standard, but not impairing our independence in the process, and considering new audit considerations and new audit approaches because that standard's out now. So we'll talk just a little bit about that. Internal control, that kind of dovetails into the risk assessment area. And then SOC engagements, that's the performance of service organization control engagements. It's system and organization control engagements now. So we'll talk about each one of those. So next slide, Patrick. And common risk assessment factors. So, when we reached out to peer reviewers to get a good understanding of where the challenges in risk assessment were coming up, we did a couple different things. One, we reached out directly and we had discussion groups and so on and got their feedback. We also dug through 400 different peer reviews where findings have been detected. In the peer review world, they call them matters for further consideration. And we actually read the descriptions of the problems. We read the responses from the firm, and we got a really good understanding of where firms are tripping up today. So they fall into 4 primary areas. The first one is not gaining an understanding of your client's internal controls, and we'll talk about that on the next slide. The next one is not addressing significant risks properly as you go through. So a couple key points around significant risk. The first one, every single audit that you perform has at least one significant risk, and that's management override, the risk associated with management override. You can take a look at AUC 240, and I think it's around paragraph 32, somewhere around there, and dig into that. But we had a whole lot of firms telling us, we have no significant risks on this client, so we're just going to kind of move past that step. The reason that this is important is when you identify a significant risk, that risk warrants certain procedures, certain approaches that are different from other risks that are identified at that client. There's certain additional steps that you have to take associated with those risks. So you've got to gain an understanding of the controls around those risks. You have to understand how those risks are mitigated before you can ultimately conclude that audit risk overall has been reduced to an acceptably low level. So important to identify those significant risks, and also important, as you go through to ensure you're identifying at least one for management override, and for virtually every audit, there's going to be a second one for revenue recognition. So just make sure you're identifying those significant risks. The second one around risk assessment, not focusing on assertion level risk. So what we see a whole lot of times with firms through peer review and other mechanisms is we'll see, I've got a cash account. I'm going to set risk of material misstatement associated with that cash account at low, and I'm going to move on. But they don't really dig down. A lot of times, auditors don't dig down into the assertions that are relevant to the audit. So a couple key points as you're thinking about risk assessment. The first one is you want to be thinking about what are the assertions that are relevant to my audit. And if you look at AUC 315, you have to assess risk at that assertion level. So it's at the assertion level and at the financial statement level. Financial statement level doesn't mean at the account level. It means, for example, there's a risk that accounting staff lack the competency to be performing their function. It impacts multiple accounts, multiple assertions. You've got financial statement level, you've got assertion level. You want to be making sure you're looking at the relevant assertion level and then ultimately tying those relevant assertions and your level of risk that you've identified to the procedures that you're performing later. If you're not identifying the assertions that are relevant at your client, then you're not meeting that standard and you're not meeting that requirement, and that's something that we see a lot of times. And then the last one there is not linking risk to your procedure. So, in a lot of sets of audit working papers, what we'll see is, I'm going to go through, I'm going to do my risk assessment because I know it's required under, professional standards. Then I'm going to set that off to the side. I'm going to pretend I never did that, and I'm going to do the exact same procedures I would do for any other client. I'm going to go through my standardized audit working papers, and I'm going to, check off the procedures that I've performed and feel comfortable at the end of the day that I've conducted my audit in accordance with standards. And if your peer reviewer goes in, if an ethics investigator goes in, if you have an internal inspector at your firm, hopefully if they go in and they take a look at your working papers and they see that you identified a risk associated with inventory valuation, for example, and it's unclear in those working papers how you ultimately mitigated the risk associated with inventory valuation, that's a problem, guys. The whole point of the audit is to identify your client's specific risks and to address those risks through your procedures. And if it's unclear how that connection is made in your working papers, that's where you run into challenges. Let's go to the next slide.
Actually, Carl, before we do that, I know that these are pretty common issues that we see in practice. Just kind of curious, Garrett, is there anything you could give us just from a practical application that maybe your firm is doing or focusing on when it comes to some of these risk assessment issues?
Sure. I think first and foremost, to Carl's point, I think one of the biggest things that we see, for example, when we are picking up a new client or we're doing something that was audited previously is surrounding internal control. Now, our practice at my firm is all privately held businesses, no publicly traded companies. And so oftentimes you see that people don't think that they have to address internal control at all. And I think that that's where, as Carl said, there's a little bit of a deficiency because, even though you don't have to test internal controls, you're not doing an integrated audit, you still have to understand. And depending on where you assess risk, there's a whole host of steps that should or should not be done, whether it's just understanding the reconciliation controls or understanding the controls specific to your risk, so a fraud risk with something. So I think that's one of the big issues that we see a lot, and I think that that's one of the things that we address and we pound a lot, that it's not just checking a box saying, does the control exist, and moving on. It's really documenting our understanding of the control, how it should work, and that way we can then kind of identify in case something does go wrong, where in the process that did occur. And then linking risks to procedures, I think that that's one where, we went through and we have kind of redone our audit methodology a bit over the last 5 or 6 years. And, doing that linking, it might seem like a tedious process, and it definitely can be the first time you go through and do a comprehensive risk assessment from top to the bottom. However, over time, it does allow you, we found it gives you efficiencies. It allows you to cut out steps that you may have been doing just because that's what you've always done, and now you don't have to do that anymore. Now you can, focus your audit on the areas that are really important. From a client perspective, the feedback we get is significantly better because they actually think that we're actually paying attention to things that matter, like their inventory for a lot of manufacturers or precious metals companies that I deal with, focusing on the inventory, the valuation of inventory, as opposed to doing 37 procedures over prepaid insurance. So I think that, in practice, while, as Carl says, it's still a deficiency, I think those are two areas where we also see them, even just in and around other clients that we see. And we've been trying to really put a focus on those two areas in particular, understanding clients' internal controls and then doing the ultimate links, because we think that those ultimately lead to a more efficient audit when implemented correctly.
All right, thank you very much. And Carol, I think that kind of teed you up for the next one pretty well too. It's the second issue that you noted as an area of focus was internal control.
Yeah, I think that's right. And just before we move on, just to kind of revisit a point that Garrett made. A lot of times what we'll hear around risk assessment is this is going to be so much more work. Like, I'm looking at all these different assertions across all these different accounts and, assessing risk for every single one of them and then linking it to the procedures that I perform. It's going to take so much time. And really, once you go through the audit and think through, these are the only assertions that are relevant. I might have an account with 6 assertions and only one of them is relevant. So that's the only one I'm focused on. What we've heard from a lot of firms is they end up eliminating procedures, substantive procedures that they were performing that had nothing to do with their client's risk, and at the end of the day, it can save you time. But from an internal control perspective, absolutely, I completely agree with what Garrett said. We're seeing auditors believe that their client has no controls, especially in a small client environment. It's an environment that I came from. I audited a lot of small private companies, but even the smallest companies have some controls, guys, whether they're reconciliations, whether it's marking something paid after it's been paid, or an access control to their QuickBooks or whatever. All of them have some form of controls. So that premise that my client has no controls, if they have no controls, it means that they have no ability to prevent or detect a material misstatement. And then you got to be thinking to yourself, is it possible for me to do this audit? The next common issue around internal control, auditors don't understand which controls are relevant to the audit. So, that's kind of the next step. First, you identify the controls. You're looking at, which assertions are relevant in this audit, where are my significant risks, and so on. And then leveraging that information, you identify the controls that you actually have to pay attention to that are relevant to your audit. Then after identifying which controls exist, a lot of auditors will stop at that point and they'll say, that's enough. I've done enough work, and I'm going to move on. To Garrett's point, you have to do design work. You have to gain an understanding of design, and you have to gain an understanding of the implementation of that control. And then, improper assessment of control risk. We see people taking credit for internal control internal controls that they haven't tested. So you want to make sure that when you're assessing risk, you're setting control risk at maximum unless you're going to test and place reliance on the operating effectiveness of that control. And then auditors don't link further procedures to control-related activities, so that's that linkage point that we just made. So Patrick, if we want to go to the next one.
Yep, up to revenue.
And that's revenue recognition. Yep. And, guys, we're just kind of starting building out all our resources around this. We have a page that's been visited, I think, like 65,000 times, but focusing specifically on auditors, we're just kind of, starting the build. We'll have a Journal of Accountancy article on this topic and so on, but important things to know here. So as of July 2019, about half of all private companies had not yet started implementing ASC 606. So you guys are in busy season now. You're in there and you're seeing these clients, many of whom probably haven't started or they kind of implemented ASC 606. The important thing to think about is, am I impairing my independence by helping them too much? We're getting a whole lot of practitioners tell us, I'm getting pressure from my client to come out and make management decisions for them on how they're going to recognize revenue, and there's so much judgment involved. But I don't feel comfortable doing that because I'm the auditor. And really, you shouldn't feel comfortable. You can bring in another firm that can take a look at that, but make sure you're not impairing your independence. And then the auditing estimates under 540, it's an area where a lot of practitioners struggle, and it's an area that's taken on renewed importance under ASC 606. There's so much judgment, so many estimates involved. We'll be pumping out resources around that, but those are some areas to focus. Then the next one under engagement acceptance. What we've seen around engagement acceptance is that low volume auditors A lot of times if, I'm an engagement partner and I just do a handful of audits in a given area, or I do a handful of total audits, that creates challenges. So, the DOL, for example, found that an engagement partner who does 1 to 2 employee benefit plans had 76% nonconformity, so they had a blown audit 76% of the time. We did a similar study with single audits. We found that engagement partners who only did 1 single audit a year had 68% nonconformity. And then this past year, our most recent results, we took a look at engagement partners who had under 2,000 hours of audit and examination hours over the preceding 5 years versus over 2,000 hours, so about 400 hours a year. And that 2,000-hour mark really did mark kind of a fall-off in quality. So if you are doing a bunch of audits and you're over that 2,000-hour mark over the preceding 5 years, what we found was 33% nonconformity, not a great number, but also not, absolutely terrible. What we found was under 2,000 hours over the preceding 5 years, 69% nonconformity. So that's almost 3/4 of the time your audit is going to require you to go back and do additional work to withdraw your audit report, et cetera. So what that says to us is, this is, if you're an engagement partner, if you're thinking about taking on an area that you're not familiar with, that you haven't done a whole lot of work in, if you're only doing a handful of audits, the key thing is not necessarily to get out of that area, but to invest. Make sure that you're investing in quality by bringing in EQCR reviewers, by getting the ANA guides in that area, by taking as much CPE as you need so that you have a mastery around that. I had a sole proprietor who used to be on the peer review board, and he would move into different areas, and his strategy was he would get an EQCR reviewer from another firm who had deep expertise in that area, and he would keep them on those engagements until he wasn't getting review comments anymore, and then he felt like he had the competence to continue performing those jobs on his own, so something to consider. And then the next one, the next slide after that is SOC engagements, and this is the performance of SOC engagements, guys, not necessarily the reliance on SOC reports. And, SOC is blowing up as an area of practice. Firms are telling us, one large firm told me over the past 3 years his practice in that area had grown 1,000%. So rapidly growing area, and it requires a whole lot of systems knowledge, a whole lot of controls knowledge. And we've already gone over, a lot of auditors are challenged when it comes to auditing controls. So the key point with this one is before you take on a SOC engagement, if you are considering doing so, make sure you have a good understanding of the requirements under professional standards and a good understanding of that industry and that type of client such that you feel confident you can perform it in conformity with standards. So those were the main issues, Patrick.
All right, Carl, thank you very much. Really appreciate that overview. A lot of things for us to think about as we look at our practice going forward and making sure that we're complying with those issues that you pointed out for us. So thank you very much for that. What I'd like to do now is kind of move forward into that next trend that we talked about earlier, and that is incorporating data analytics into our audits. I think this is part of the ongoing AICPA initiative to help increase audit quality, as well as it gives us opportunities, I think, to help increase our level of client service. This is also one of those where the lines are starting to get blurred a little bit between, what's part of the audit, what's the product that we're using. So it's going to kind of merge those last two trends together a little bit. Before we get into the topic itself, again, I'd like to just do a polling question and kind of get a feel for what tools the audience is using. There's a lot of different tools that are out there. So Danielle, if you wouldn't mind putting up the next polling question for us. I'm kind of curious what the group uses.
Sure. Let's go ahead and find out right now. The question is, what tools does your firm use to incorporate analytics into the audit? Your choices here are Inflow or MindBridge, Teammate Analytics or IDEA, or Other. So once again, you'll want to click the radio button to the left of your choice here and click the Submit button for it to go through. we are asking what tools your firm uses to incorporate analytics into the audit. As everyone gets those answers submitted, just another reminder, we're getting some good questions coming through the Q&A panel. If you do have a question, you can submit it through that panel. We should have some time reserved at the end of today's session to address some of those questions. So I'll go ahead and give everyone a final few moments to get their responses in here. Give everyone a final 5, 4, 3, 2, 1. Looks like other at 70% is the winner here. About a quarter of our attendees said Teaming Analytics or IDEA, and then Info or MindBridge.
All right,
Patrick, back over to you.
Yeah, thank you very much. I appreciate that, Danielle. Interesting numbers. You know, we're obviously starting to see more and more of these analytics type products come into the market, so it wouldn't surprise me if we start seeing some of those other ones bump up a little bit. I know a lot of us are still doing things like this in Excel or some other format, so it doesn't necessarily surprise me, but would be interesting to see where this poll is in a year. Now, before we get into the what's of data analytics, I always think it's important just to pause for a second and understand why. You know, why are we hearing so much about this? Why is it such a trend in the industry right now? Well, as we mentioned, you know, it is part of the ongoing AICPA's initiatives. If you look at the exposure draft that's coming out around evidence, you'll see some concepts about analytics built into it. They did issue, I think it was a couple years ago now, the guide to audit data analytics. So a lot of information is coming out encouraging us to incorporate this into our audit process. To me, more importantly, is this really helps us meet our client expectations. There was a study done by Forbes and KPMG, this was a couple years ago now, but there really is that expectation that our clients are expecting us to do things like select bigger samples. They're expecting us to incorporate more data analytics into the audit. And ultimately, this should help us do a couple things. Number one, hopefully be more efficient in our practice, and we'll talk about that in just a second, and also help us communicate better with our clients. So now that we know kind of why, you know, what is this? We hear about this all the time, but just to make sure that we're all on the same page, what do we mean when we talk about audit data analytics? Now, I grabbed the definition right out of the AICPA's Guide to Audit Data Analytics, and I think they did a fantastic job with this definition. You know, they defined it as the science and art of discovering and analyzing patterns, anomalies, and extracting useful information. The piece that I like so much about it is this is not necessarily just a science. This isn't something that anyone can tell you, you know, you need to just do this or you just need to do that and follow these exact steps. It really is an art. It's going to take some time. It's going to take some skill development on our part to go through and be able to identify these patterns, to look at these anomalies. Another thing that I like is kind of the second half of the definition there. You know, they give us some ways that we could do this, and it's through things like modeling. You know, we hear things like predictive modeling, being able to go through and do more of a predictive analytical procedure versus just maybe a trend analysis. Visualizations have been a key item. We've all heard the phrase, you know, a picture is worth 1,000 words, but let's go ahead and let's put maybe some trend lines into a picture. I think that can help not just us as auditors right now, but also in our communications with clients, especially if we're not able to go out and meet with them face-to-face. I know there's a lot of video conferencing opportunities and those types of things, but the more we can share pictures and highlight key things that we're seeing in our clients' data, I really do think it can help increase the quality of the communications that we're having with them. And that really goes into, you know, to the bottom of the slide there, relating this back to our Enhancing Audit Quality initiative. You know, how do those come together? Well, first, to do these data analytics, to do these kind of advanced procedures, it really does require us to have a better understanding of our clients' operations and risks. You know, we've got to know where things are trending. We really need to have that better understanding of our client. So we think of our planning and our risk assessment that Carl talked about a few minutes ago. We're going to have that deeper understanding. That deeper understanding is going to allow us a better risk assessment. We're going to have a better idea of where those potential material misstatements might be. And ultimately, it's going to help us go through and improve that communication like I mentioned a minute ago. Now, as I talk with firms, as we go out, one of the struggles that I still hear is just, how do we go and incorporate this into our practice? This is such a broad field of these data analytics. There's so many tools out there. I like this chart that got put together. We put this together based on the guidance that was in the Guide to Audit Data Analytics. And really what we tried to do was to go out, and the first column there is just what kind of things should you be considering when you choose a data analytics tool? What kind of functionality do you need as you're looking at your practice? Can it do things like connect directly to a client's general ledger? Can it import things like a PDF if you know that your clients are still sending you a lot of PDF-type files? Are there tools in it to help prepare the data for use, to evaluate the reliability? What kind of visualization capabilities are there? And then ultimately, how do you document the results? One of my favorite things about our data analytics solution, Teammate Analytics, is literally when you run a procedure, it takes a screenshot of all the selections you made. So you think of that audit evidence standard of being able to reperform a procedure, well, you literally have the picture there of being able to go through and do that. So if you're going through and evaluating a tool, maybe you have some time now, sit down and ask yourself those considerations. Think about your client base. And then as far as incorporating analytics into your audit, well, I think they can be done in just about every section of the audit. We can go through in the risk assessment. Your analytics tool can do things like trend analysis, just looking at key financial statement ratios, maybe visualizing those, plotting them on a graph so it's easier to see where those trends are going. If we're talking about test of controls, most of the data analytics programs out there are able to select samples for you. A lot of them have matching features where if we get different populations, we're able to go through and match those. Substantive analytical procedures is a lot of what we're talking about here, things like predictive modeling, doing things like regression analysis, variance analysis. I don't need to read all these bullet points for you, but what I would encourage you to do as you go through and you start thinking of ways to incorporate analytics is to ask yourself, in my practice, what types of things can I do? This is one of those things that when your head's down and you're working at your max capacity, it's hard to do that because we're just focused on getting our work cranked out. So if you do have that little pause right now, it's a great time to pull up this slide and just start listing procedures. We gave you some common examples. You could go through and add through these and say, all right, what other types of things can I do in my client base to be able to incorporate analytics into it? What I'd like to do at this point is to pull Garrett back in. Garrett, I know your firm is going through and kind of walking through this exercise right now. Any kind of practical guidance that you can give to us?
Yeah, sure. Implement this before a pandemic hits. No, our plan originally was we've been evaluating tools. We think we've decided on a tool, which in our case is going to be Teammate Analytics, and our plan was originally to implement this right after this busy season, sometime late April, early May, to kind of get everything rolling and then hopefully roll these out for our summer audits. We are assessing that now. However, we're not varying from the path of trying to figure out the best way to implement an analytics tool into our audits. We ultimately think there's a couple things that, A, it's going to just help us with efficiencies. I think clients are expecting a little bit more. I mean, you kind of talk about the visuals. I mean, we get a lot more when we're meeting with, audit committees and boards of directors. They kind of are asking for that. Like, do you have any visual things? Do you have any trends? Do you have any cyclical analysis that you could provide us? And so I think that's going to be something where it's going to be a demand for it in the marketplace. The other thing is that, again, I mentioned my company's practice is mostly in private industry, and I've seen a dramatic shift over the last 4 or 5 years of private entities going from maybe having a very basic system, whether it be QuickBooks or even another system of just kind of keeping debits and credits, to implementing full ERP systems. And I've had 5 clients go through that over the last 2 years. And I think that as they do that, the amount of data that's going to be available that these analytics could apply to is just going to explode as well. And so I think that that's another opportunity, again, to be trusted advisors to our clients and to kind of look at this stuff. And again, as sample sizes need to increase and everything else, these analytic tools are going to give us the ability to address what we need to address, and will also give us a product that I think the clients are going to like at the end of the day.
Excellent, thank you. And Carl, I know this might not be your exact area of focus, but any insights you can provide for us?
Yeah, I think it's an interesting area and an interesting set of developments. I mean, obviously the Auditing Standards Board is working on, what does it mean to the audit if we start, and again, thinking about it from a small client perspective, if we start taking a download from QuickBooks, running a sophisticated algorithm on that download, and it points out to us these are the riskiest transactions. I mean, what does that do from a sampling perspective? What does it do from a substantive testing perspective? It's a really interesting time. Interested to see where it goes. I can share, from an enhancing audit quality perspective, one of the studies that we commissioned. We commission research studies periodically. Looked at data analytics and how they're being performed in practice, and some learnings from that. And one of the things that they learned was that folks are looking at the amount of work being done versus the effectiveness of work being done. And if you spend more hours on it, there's kind of a natural inclination to think that it's better work. And the argument that the researchers made was, that's really not necessarily the case, and we have to get over that bias. But interesting times, Patrick.
All right, thank you very much. I appreciate that. Related to this, the last topic that we wanted to touch on was just keeping up with changes in technology. From that last polling slide, asking about which analytic programs you guys are using, I just grabbed a couple of the real common ones that are out there, but there's so many, and there's so many different products coming to the market right now that really trying to keep up with it is becoming a challenge for firms. And one of the big challenges that I see when I talk with practitioners is going through and using a piece of different products. We might use this product and that one, but none of the three of them really talk with one another to give us that complete picture. And that's really what our goal here at Wolters Kluwer is, and that is to provide your firm with an integrated audit approach. What we want to do is look at it and take all these various different pieces and pull them together into one platform so that we're not chasing things between different systems. We have our foundation, our work paper management and trial balance platform of CCH ProSystem FX Engagement. Sitting on top of that is CCH ProSystem FX Knowledge Coach. Knowledge Coach is our audit methodology, our forms and our checklists, as well as the supporting materials that's really designed to help you avoid a lot of those common risk assessment and internal control errors that Carl was mentioning before. The nice thing about it being that it sits right on top of our engagement platform. When you go to do things like roll forward, your forms are automatically going to update, so we're not worried about maintaining two different systems. We can also have links directly from those Knowledge Coach forms out to our Accounting Research Manager platform, so enabling you to quickly research items, especially when we get into new standards, or as Carl mentioned before, maybe if you get into a new industry. So being able to link directly to an industry guide rather than having to hunt and search through a different platform. As Garrett mentioned, Teammate Analytics is our analytics solution. One of the nice things there is it's integrated with Knowledge Coach. As we go through our audit programs inside of Knowledge Coach, there's going to be suggestions about ways that you might be able to use Teammate Analytics. And then our last piece of the integrated audit approach is our Audit Accelerator, which is our data ingestion tool, being able to connect directly to client ledgers and pull in information to help us with our procedures. So having all of these tools on the same platform, being able to share information, is a way that we're really seeing firms being able to leverage technology to drive efficiency in their engagements. A major goal of ours, and some things I'll share with you in just a minute here, is to integrate all these tools into our CCH Axcess platform. That's going to allow us to share this information even more with things like our tax preparation software, our workflow tools. And it's going to push all this information to the cloud. So when we get into situations like we have right now, we'll be able to go through and still stay connected, be able to work and not experience any downtime in case we do run into these types of things. I did want to highlight just a couple of the tools and point them out for you as we go through this. The first one that I wanted to point out, this is something that is actually included as a feature of our CCH ProSystem FX engagement, our trial balance and work paper management tool. And it's a feature relatively new, so even engagement users that are with us today might not know about this, but it's a feature called Engagement Organizer. And what it is it's basically a cloud-based platform for you to go through and be able to request and receive documents from your clients. So basically a portal that's included at no additional cost with CCH ProSystem FX engagement that allows you to go through, send your requests, your clients can receive that request, upload documents to it. There is the ability, once documents are uploaded, to leave notes in case you need a different version for the client. And the most recent enhancement with that is actually the ability to incorporate those directly into engagement itself. So load those PBC documents, if you will, directly into your engagement from the organizer. And it's a great tool. The use of it has really taken off in the, I hate to say it, but just the past couple of weeks as firms are looking for ways to try and manage that back and forth with the clients rather than just going and using emails or some other tool. The other one that I really wanted to highlight is Knowledge Coach. You know, we saw a lot of those pain points from earlier in the session related to risk assessment. Again, Knowledge Coach is designed to address those issues. It's also designed to help you avoid over and under auditing. So we talked about linking our procedures to the assertions that are relevant. That's a requirement of Knowledge Coach. There's no way to use Knowledge Coach without directly linking your procedures to the relevant assertions and the related risks. One of the real big enhancements that we've made with Knowledge Coach is just released last fall is the release of CCH Axcess Knowledge Coach. I mentioned we're looking at moving these tools up to the cloud. So we have released the first version of Axcess Knowledge Coach, the cloud-based audit methodology. I know these might be a little bit hard to see, but I just wanted to capture a couple screenshots for you. You know, it's completely browser-based. So from a collaboration perspective, it's great. You and I can literally log into the same audit form. We can be looking at the same thing at the same time and going back and forth and answering questions. Maybe you know the first three. Maybe I know the next three. We're literally only limited by the speed of our browser. You will notice in the picture in the front, there's also inline diagnostics warning you of, hey, here's something that you might need to add, or here's an issue that we see. So we're going through, we're trying to design the program to help ensure that you're not going to fall victim to some of those issues that we saw before. And then the last one I wanted to point out, Garrett mentioned this one for us already, that Teammate Analytics is our platform for performing analytics on our audit. Teammate Analytics integrates with Excel, so it's a platform that all auditors are used to. I have a picture of what the menu bar looks like on the screen for you. So it's not like you have to learn a new software. All the 150 different commands that are in there are just going to be in an Excel drop-down menu. It's very, very user-friendly. It does have the ability to handle data sets larger than 1 million rows. I know some of you might be saying, well, hang on a second, there's, you know, if it's in Excel, I can't do a huge population. You can. There actually is a way to upload your information into a database behind the scenes and still be able to go through and do it. It has the ability to import from PDF and other data sources, so very, very easy to use data source. I did get a reminder that came in that if anyone is an engagement user, a ProSystem FX engagement user, make sure you download the latest version of engagement to get that update that allows you to import your files directly from Engagement Organizer. So thank you for the reminder on that one, April. Just a very good reminder. So those are the 3 items that I wanted to point out. Now we do have one last polling question for you. So Danielle, if you wouldn't mind pulling up that polling question, we can get that one knocked out, and then I think we have some questions that we need to take a look at.
Absolutely. Let's get to that polling question now. Would you like more information about the technology you've seen today? And you can see your choices there. Yes, I'd like more information. We're actively considering options with the next 12 months, so we're interested in technologies that will improve our efficiency, quality, and realization. Yes, I'd like more information to prepare for future decisions. No, I do not need more information at this time for a purchase decision. Or thanks, but I intend for CPE only. Let's go ahead and dive into, we've had some really great questions coming in. We have a few, understandably, about the current environment we're in. One person is asking, do you think we'll see more companies taking a pandemic big bath? And we also have someone asking, what are auditors doing for site visits during the current pandemic? Are you remote auditing?
Garrett, I think that might be a great one for you to jump on.
Absolutely, I can definitely talk about that. Yeah, so we've transitioned almost everything now to remote auditing at this point in time. We're not sending staff out. Our firm, so again in Rhode Island, our firm is about 95 people. About 75 of them are working remotely now. There's only a skeleton crew in our office, and all client fieldwork has ceased at both our request and at our client's request. However, we're still communicating back and forth. So we have a full suite of CCH products. So we are using Document, we're using our portals and other kinds of things like that to facilitate workflow back and forth. We're using a lot more Skype than we were before to kind of do inquiries and that kind of thing. But we're still trying, we're working through, we're probably in our second week of doing this, and we have basically at this point transitioned to a more remote workforce using all of our, all of the tools that we have. But getting clients signed up for portal so they can transmit information safely and securely has been a big thing. So that way we can still get scans of source docs and other kinds of things to keep moving forward with the audit at this point in time. I will say I was on a call with the G400 with the AICPA the other day. I mean, I know they're trying to coordinate with financial institutions to see if they can push back or at least get some kind of relief on filing deadlines, since a lot of firms might not have the capability to do remote auditing. But at this point, there were no clear definitive actions at this point in time. But they were going to push hard to try to lobby for that. I can say that. And you might want to remind me, what was the first part of the question there with the pandemic?
Sure. It was, let me pull this up. In the current economic environment, do we think we'll see companies taking a, quote, pandemic big bath?
I think that you're going to have a lot more evaluation. I know we have in our firm, we've had standard procedures that I've had to work with our audit department head to talk about, addressing going concern issues, addressing ongoing liquidity issues and that kind of stuff. So I think it's a real risk. I think if you're doing audits, especially right now, I think you really have to evaluate those. And for some, it might be just the general economic factors that might have to do them. If they have manufacturing overseas, then they might have a more significant risk. So I do think that those are things that you might want to consider as you're kind of closing out any audits now, because I do think there is that risk that there's a lot of companies that might have been doing fine 2 months ago that are now in serious jeopardy. But I think it's something you have to consider.
Okay, great. Makes sense. I think we have time for one more question. Any of the questions we don't get to today, we will be able to answer. Today's presenters will be able to answer via email. One more question we have: when you perform analytics, or are they done at the preliminary or at the conclusion of the audit?
I mean, I would say for us, we do them in both. I mean, I think for preliminary, it kind of helps us tailor our risk assessment accordingly, and we can maybe help identify riskier areas, or as Carl kind of said, riskier transactions. And then I think, again, at the conclusion, we do them, again, for that more of that full kind of scope approach where we look at it and say, all right, is there anything here that is popping now, again, that we didn't address, and doing it there. So I think it's important, again, integrating them as part of your audit procedures is big, so that way it's kind of more real time. It's not like the binder's getting closed down and then, okay, now crap, there's something else we have to do. But I do think we do generally perform them both at the beginning, during, and then at the end of the audit.
Great. Well, that's taking us to the end of the hour. Just another reminder, as I mentioned, today's presenters will be getting back to these questions via email next week. And I want to thank all of our presenters today for a great presentation, and I want to thank you all for joining us today.